Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Reece Chowdhry, founder of RLC Ventures, to talk about their SEIS and EIS fund. Reece, tell me a bit about the fund.
So the fund is an SEIS EIS fund which backs technology companies which are based in the UK and have an emerging market presence. So typically a client will get around 12 plus companies within their portfolio across our various different verticals.
So tell me a bit about your background and that of RLC.
Sure, Alex. My background is I worked at EY as a management consultant in the technology division and chartered as a management accountant. Post EY, I set up RLC Ventures with a number of partners, and the premise of RLC Ventures was to back companies, technology companies particularly, that make a difference to people's lives in their work and their daily lives. We built a team with 100 years experience and invested in around 45 different companies over that period.
So let's talk about some of the companies you've invested in. Give me a few examples.
So one of the last companies we invested in is a company called Greendeck. So what Greendeck do is think of Google Analytics for online retailers. So if you are Puma, for example, you can go onto the Greendeck platform, you can look on your website and see a white t-shirt, and then you'll see Nike is selling it for this much, they might have discounted it for this much. And so it uses artificial intelligence to look at all different websites from your competitors and see how they're pricing things, how they're discounting things, what kind of competition. And we really, this business is really core to our thesis in terms of what we look for a company. They were making around £10,000 a month when we invested into them, so pretty early stage, very scalable in terms of the technology, doesn't need a big operating system to scale across the globe, has a UK topco and then emerging market office. So there was this duality that we like, which meant the cost base was significantly lower than having a UK company with all your engineers and you're spending hundreds of £1,000s on a machine learning engineer or a technology department. So this is a huge competitive advantage from the moment we invested, which meant they were actually profitable from the day we invested in them.
Okay. And another example?
Another company that we recently backed is a Bristol-based company called Scribus, which it's a very interesting business. Essentially what they do is they've developed some artificial intelligence that mimic handwriting. So you can send mass letters with your own handwriting at scale to different people. So for example, you might be we might have an election in this country very soon, so some of the political parties might use it as a marketing tool, and on letters, handwritten letters, there's a 90% open rate. So they've got loads of clients from all over the world that are using that technology to mimic handwriting and use it as a really interesting marketing tool. They don't produce anything, they simply provide the technology that help you to mimic your handwriting into a written envelope.
And how do you find these deals?
It's a great question. There's a couple of ways we find the deals. Obviously, over the years, we've built a very good relationship with our founders, and one of the key sources of our deals is through founders. In our portfolio, we surveyed all of our founders, and we have 100% approval rating because we really put a lot of effort in working with them from the ground up, and we won a lot of awards for working with our founders on that basis. So we get a good chunk of deals from founders. Secondly, we're very active across the whole of the UK. So we built a scout network, which is quite unique to us. So every major university and hub, we usually have one individual at that university that represents us looking out for deals, and then we give them our criteria, and we sponsor a lot of universities, VC societies, entrepreneurs networks. So this year we're sponsoring Oxford's VC Society. So this is another way we get deals, and the other way is through our network. We co-invested a lot with other people over the years, other angels, other investors, and other fund investors. So these are the core areas that we get our deals from.
And how involved do you get in these companies?
So we take two approaches to this. We're either taking a position where we're active in those companies, or which means that we're there, the ground, like building them from the start to they maybe get to the next big Series A financing or next large scale financing, which we might step away. So one of the things we've done is we've built this platform for entrepreneurs called what we call Beyond Capital. So we've tried to take a different approach how we work with entrepreneurs, just small things like when they, for example, complete the funding round, we help them with press releases, or if they need help with recruitment, we're there, we've got a person in-house that helps recruiting, and little things like we have a WhatsApp group with every single founder. So we try to take a dynamic approach rather than the old school, VC meeting every month at a board. World is moving at a quicker pace, so we try to build our platform on the back of this. And then if we're not kind of active in the board, we'll rely particularly on our co-investors who might be, might have more equity in it, in the deal, or they, know they are more knowledgeable in a particular sector that we're investing in. So these are the two ways we make sure that we're active, even if we're not directly, day to day in the company.
There's lots of money chasing these deals. Are you finding things overvalued?
It's a good question. I think we are very disciplined on valuation, and I think that's proven in our track record, which we'll probably talk about later. And I think that you need to be price sensitive at where we are the market. We see a lot of money coming in, a lot of EIS money, a lot of SEIS money. But I think because we built a very solid platform and brand within the industry, entrepreneurs want to work with us. So we feel that when we want to invest, and in every company we wanted to invest in, entrepreneurs have allowed us to do that. We feel that we're at the price point that is sensible, and we won't deviate from that because it moves away from our core investment thesis and our parameters around our fund.
And how risky is it?
So I think it's risky in the sense that no question about we're investing in technology and we're investing at a relatively early stage, even though, as I mentioned, across the revenue, early revenue and pre-revenue. But the way I think we get around the risk, particularly, and it's every study you would look in early stage investing would say you need a portfolio, you need a diverse portfolio. So by giving clients 12 plus companies in their portfolio, we feel like, and over those different revenue stages, we feel that we really mitigate people's risk by having that quite diverse portfolio. And actually we do go beyond 12 on occasions, so people do have a good group.
How many of the companies have you got are profitable?
I would say around 20% are profitable, okay. But obviously as we're investing and the type of investing we're trying to do is we're trying to invest in companies that are scaling very quickly, growing very quickly, and are potentially fund returners, which are 10x plus on our money. And so the profitability metric isn't something that is, I suppose, widely used. But what we look for, more importantly, is the use of capital. Are they burning through capital at a clip that is inefficient in our opinion? So this is why we like the emerging market thesis that we have, where the cost base is just so different from other, I suppose, other investment propositions.
If the economy takes a turn for the worse at any point, are you going to be able to keep funding these companies?
I think so. What we're doing is investing in companies that have technology which is aimed to develop people's lives or the way they work in different ways. And I think if we're investing in companies that are doing that, there will be attractive propositions no matter what the political environment. We've gone through years of uncertainty with Brexit at the moment, and I think the appetite for what we're doing, particularly on a global scale, I speak to a lot of colleagues over the other side of the pond, and they're desperate to do more deals in Europe and particularly the UK. So I feel like the climate, will still be pretty positive regardless of the economic outcome.
Have you had any exits?
So Alex, I'm really pleased to announce in the last quarter we exited a company that was in our first fund and our second fund. And this company, we were the only investors from the idea stage to the exit. And I'm pleased to announce that we achieved 40 times our money on this deal, which was a really good outcome for investors within a 2-year period. So this shows that our thesis is kind of working like the way we like. The company was UK based and Bulgarian, which fits our thesis very well. Combined with that, we had another partial exit last year of 2 times our money.
And what would you say is the typical time frame investors should expect to start getting some money back if they invest with you?
So I think typically where we're investing, I would say 5 years plus. The life cycle where we're investing particularly, I think this is a fair estimation. Sometimes it's a little bit earlier, but I think, in the life cycle of business, I think 5 years plus is what we would typically expect.
Right, I'm going to invest in an EIS this year. Why should I invest with you?
There's a few reasons I think you should invest with us. One, I think, is with our fund, investors get something slightly different. They get the UK presence and emerging market footprint, which is, I think, unique in the EIS market and gives investors particularly more global exposure than the typical UK-based SEIS fund. Secondly, I think, our team, I think with 100 years experience in the team and a number of exits and over 42 deals done within the team, I think, you're backing a team that have done it and been there before. I think thirdly, with our fund, I think we're the only EIS SEIS fund in the market that give a percentage of our exit profits to founders' causes. So for example, if we exit a company, some of our own profits go to causes that founders back. So it might be cancer research or different various charities. I think the other thing is, and the last thing I would leave you on is our track record. I think our track record is positive in the industry. As I mentioned earlier, our current book is 4 times what we invested versus the market at 2.5 times.
Reece Chowdhry, RLC Ventures, thank you very much.
Thank you, Alex.